In this video, I want to go over some of the big trades of 2015 and what really generates big opportunities in the market is when a market transitions from a stage one base into a new stage two bull market. And to be in position to be coming off of a stage one base, the prerequisite for that really is a stage four bear market, which wrings out all the excess in a market and produces the phenomenal buying opportunity that exists after stage one completes. Now, the problem in the current market is that there just wasn't any stage one opportunities really because this market is so late in its recent stage two advance. If you look at the NASDAQ 100, you can see that since 2011, which is really what created the last great opportunity in the market, after we based out in 2011 and then kind of finally broke out of that base in early 2013, over this whole 2 year time period, really the market kind of, even though it still went gradually higher, it created this sideways basing condition, which produced this phenomenal advance over, roughly 2.5 year period up until the middle part of this year. But if you count from here all the way until mid 2015 is where this recent stage two has come from, which means that we're kind of late in this recent stage two because it's been going on for 2.5 years now. And really coming off of this in 2013, a lot of sectors like healthcare, some technology sectors had created monstrous basing formations, which is what launched them into bull markets. So those were the sectors that really, uh, had the phenomenal opportunity behind them. The commodity sectors and other sectors that were coming off of big stage two advances in 2009, 10, and 11 are the ones that have gone down recently because they went into bull markets before other things like healthcare. And this is why you've heard about a lot of fund managers this year have gotten crushed because like half the stocks in the market um, already completed their stage two tops and actually have been going down for a large portion of 2015. So this has been a very treacherous market because people that have stuck around and tried to wring the final gains out of this old bull market get hurt because they're trying to um, stick around for stage two advances that are just evaporating. One thing that's allows you to keep track of that kind of stuff is my stage analysis screening tool. So one thing that I've noticed all year is that there just isn't that many sectors in stage two itself. Even like if you go to the markets page and filter by stage two, you just don't see many stock market sectors where the majority of stocks are in stage two. And if you look at the major indexes themselves, you'll see that like for instance, the Dow Jones is the strongest index right now, but barely 50% of the stocks in the Dow Jones are in stage two. If you go down and look at the S&P 500, less than 50% of stocks are in stage two, and there's just about as many stocks in stage three or stage four as there is in stage two. Um, Same thing with if you go down and look at the Nasdaq, has almost 50% of stocks in stage four versus almost 40% in stage two. So this is, it's been a sick market the entire year, which is one of the reasons why I've stayed largely out of the market this year. But people that have tried to trade this market have been hurt because there just isn't a lot of opportunity on the long side because of the old nature of this bull market. So with that being said, let's look at some of the big trades of 2015 and how they played out. This stock, Amazon.com, is one that almost everyone's talking about right now. because of the whole Facebook, Amazon, Netflix, Google thing, where the FANG, where they're all still going higher, and some of the only stocks that are still doing well. But Amazon, the reason why this was a big opportunity this year was because the base for 2013 and 14, and you see a nice stage 2 breakout on volume here in early 2015, and then it doesn't even you don't even get a retest really of the 30-week moving average. But this next breakout here kind of confirms that Amazon is in a new uptrend, and it's just gone higher ever since. So if you got into Amazon at this ideal buy point right here, you're sitting on almost 100% gain. Um, Even if you bought it in after the stage 2 buy point. Netflix is another example. Same thing as Amazon, kind of broke out early in the year, but this stock had a nice stage 2 retest a few months later in April, and then broke out once again on volume, which confirmed the stage 2 advance. Um, and the stage 2, the 30-week moving average has held as support the entire time. So Netflix is still in a stage 2 advance as we speak. This is a stock, Comfort Systems, which I wasn't familiar with until this year, but it broke out on volume early in 2015, and has really just, there's different types of stage 2 breakouts, and this is an example of a stock that just broke out and then just continued going higher without doing a retest. So if you're looking for a retest, some of these stocks start running away from you. Um, Although you could consider this late, 2014 breakout. You could have had a retest, I guess, right here. So maybe if you go all the way back to 2014 is really when it broke out. But classic stage 2 breakout, and then another breakout on volume here, and we're still in stage 2 as we speak. A couple of video game stocks have been hot stocks this year, and we'll see the same thing once again. We had a nice move in 2014, but then it started trading sideways again in early 15. Then we had the breakout, a little bit of a retest here, and then a move higher again on volume. Notice how during that August mess in the markets, Activision was extremely strong throughout that pullback, which is a good sign that the stock has a lot of underlying strength. So not surprising to see Activision blast higher once the August meltdown was over with. And Electronic Arts is another stock in this sector that's done well this year. So this is an example of a strong sector combined with strong stocks produce nice winning stocks according to stage analysis. So the biotech sector has been one of the leading sectors, or basically the leading sector over the last 3 years. And what's really very interesting about this sector is that even the first half of this year, a lot of big winning stocks were biotech stocks. But as soon as the biotech sector has come under pressure lately, ever since the August pullback, the stocks themselves are also coming under pressure. So this is an example of picking the right sector. I mean, at least for the first half of the year. But if you're trying to buy these stocks now, they're all under pressure because the sector as a whole is under pressure. We can look at some examples here. Cambrex busted out on big volume after a nice basing formation early this year and really never looked back. But if you look at what's happened since August, you can see that the pressure on biotech has put pressure on this stock. It's held the 30-week moving average so far, but its advance has definitely been halted for the most part with all this continued pressure since August. Same thing with Anthera Pharmaceuticals, kind of a more extreme example, but really cranked higher in early 2015, and all the way up until August again. You're talking about a five bagger for the first half of the year, and then ever since this pullback, I mean, the stock's gotten smashed. So you really have to wait for biotech to break back into a stage two to even entertain the idea of buying these biotech stocks again. And this is a key sector to watch actually for the overall health of the market because it was a former leader. And right now we're actually kind of in a confirmed stage four right now until this thing breaks back above this moving average, which is acting as resistance now. Couple more, or one more example for biotech is Prothena got this massive increase in volume and breakout into a stage two early this year, a nice retest, and then off to the races. So this stock is up over three times from the breakout into a stage two early this year. But notice again that since August, we're just very choppy and going a little bit higher, but sideways. One thing to talk about is uh, what does create, these massive opportunities. We highlighted that 2011 to 2012 sideways action in the market, producing the 2013 through 15 massive bull market. These small cap stocks are exhibiting the same type of thing where wherever however this thing breaks is going to determine like the overall health and trend of the market. So if small caps do manage to break out from here, I mean, look at this 2-year basing pattern basically we have here. I would look for kind of smaller cap stocks to start taking over leadership if this thing was able to break out higher. But but same thing, it could break lower and be a precursor to a bear market here. So not to make a forecast, but we have to be prepared for either scenario. So right now, I mean, small caps are actually kind of in a confirmed bear market, but if the market was to gather strength and break again higher, I mean, you do have to flip around and notice that we have a basing pattern here, and 2 years of uh, a sideways market really discourages bulls, and which provides opportunity for massive gains in the right stocks. So for more background on stage analysis, definitely go to my stage analysis page at nextbigtrade.com/stage analysis, and then once you get a feel for this trading method, check out my screener at screener.nextbigtrade.com.